2025 was an amazing year for the S&P 500, but it was a terrible year for a lot of the compounder-related stocks like Adobe, Ferrari, Salesforce, Copart, and many others have been breaking down in real time. There's one of those compounders that I would call a potential generational buying opportunity, as it's experiencing its largest sell-off since the company went public. And I have to talk about the stock again. And this stock is Constellation Software, ticker symbol CSU on the Canadian exchange. Is down 39% over the last 6 months. I could put up the chart. This is its largest drawdown ever since it went public. It was one of those compounder stocks that was very little volatility and never had more than a 15% sell-off in 1 year. And it just keeps on going up and keeps on going up. And it's just an amazing company. But recently it has been breaking down, and it's down a lot from its peak. Now, Constellation Software, you could think about it as the Berkshire Hathaway of software companies. They take the free cash flow of those boring software stocks and they acquire more companies. And they take the free cash flow and they acquire more companies. And their software are in niche sector, like in government, like in healthcare, and such areas. They have high switching costs, high barriers to entry. Because if you deal with so much data and so much regulations within the government, or even within healthcare in general, it's really hard to switch to another provider. So there's very high switching cost. The company generates revenues. They do have organic around 3%, 4%. 2%, very little organic growth. But if you look at the total revenues, it's like 26% growth, 29%, 19%. And this is largely due to their very successful acquisition strategy. And you could clearly see that through free cash flow per share, where the company has grown free cash flow per share from 6 million to 120 million. And the best part about it, they did it all without diluting a single share. The company's share count in 2007 is still the same in 2026. This is unheard of. There's no software companies, no tech company in general that did what Constellation did, no stock-based compensation, and without any massive dilution. So you really have to respect that. And that's a very interesting setup for me. Now, Constellation Software had an amazing CEO and founder, Mark Leonard, and I call him a one-of-a-kind CEO because the CEO has pretty much waived his salary for the last 7 years. He owns a decent stake in the company. He's the founder of the company. He doesn't want a salary. So he pretty much waived his salary. I don't know many CEOs that are not looking to get a salary. He flies economy instead of getting a NetJet card or doing private jets because he cares a lot about the shareholders' money and he doesn't like to overspend on a lot of unnecessary things. So the culture here is amazing, and that's what really has attracted me to the stock. They don't dilute for acquisitions, which is rare. No stock-based compensation. 75% of the bonus must be used to buy the stock on the open market and have to hold them for an average period of 4 years. And that gives the company and the managers incentives to do better, because if they want to sell the stock for a price that's more valuable than it is 4 years from now, they have to do the acquisitions, they have to execute, and they have to get the stock price much, much higher 4 to 5 years from now for them to be able to cash out on a valuable bonus. So Charlie Munger said, show me the incentives and I'll show you the outcome. And this is an amazing setup in terms of a culture for Constellation Software. Now, the CEO that I just mentioned, Mark Leonard, has unfortunately stepped down recently due to health reasons, and that's really, really bad. And he put in another CEO at his place. He's been with the company for a long time. As soon as the new CEO came in, Mark Miller, he used his own money. That was not a purchase plan. It's on the public market, his own money, $5 million to buy worth of the stock. He just bought in 5 million, and he already has, I believe, like 200,000 shares or something crazy. And he bought an additional 1,500 shares from his own money. And all the insiders for the last few weeks have been just buying Constellation Software, and they've been buying more and more. And that really tells you a lot. Now, this is a big reason why the stock is going down, is due to Mark Leonard leaving, because a lot of people were invested in the company and they love the CEO and they love his track record. And once he stepped down, a lot of investors thought that, why would I take the additional risk? Maybe the company is not going to be run as good as it was when Mark Leonard was there. So they just want to exit. And that's one of the reasons why it's going down. Another reason why it's going down And this is a big one, and it's mainly AI. AI is the reason why Adobe is going down, CRM is going down, even Shopify recently has started to go down, which is surprising me, and even Constellation software. So many people believe that AI is going to disrupt and is going to kill the business model of Constellation software, and all companies, they're just going to vibe code their own software, and they're not going to need to spend money on software in general. Well, there's two things to this analogy. The first one is it worth it? Is it worth it for those companies to vibe code their own software, have to debug it, have to deal with all the regulations, maybe in Europe where Constellation has a lot of businesses, even some places in Asia where there's a lot of restrictions, or if it's a government software, there's a lot of regulations. If it's a healthcare software, there's a lot of privacy and user-based data that needs a lot of compliance, that need a lot of maintaining, that just ChatGPT or Claude can't really do all those things for you. And you have to deal with all the headache of maintaining the software. So is it really worth it when the software is 0.3% of your revenues? So if you own a company, would you be willing to take all this headache to save 0.3% or 0.7% of your revenue or 1% of your revenue? To most companies, it's not worth it for them to vibe code their own software. So the software itself is such a tiny percentage of the company's revenues or a tiny percentage of the company's expenses that it's not really worth it for them to just vibe code their own software. But the analogy is that ChatGPT and all the AI stuff is going to make it much easier to create new software. But if that's true and it's so disruptive, then don't you think Constellation will benefit a lot on saving on their largest expense, which is staffing? The biggest expense for the company is staffing. They have 2.9 billion in revenues and 1.5 billion in staffing expenses. Now, if AI is so disruptive and it's going to make things more efficient, then maybe you don't need 20 DevOps to come up with a new project. Maybe you need 5. So in this case, it's going to make the company even more efficient than it was before. And maybe that will create more competition. But if CSU can save on margins, then they can also reduce their pricing while maintaining the margins. So there's a lot to it where AI is going to disrupt a lot of companies. A lot of companies will go under. But those software companies that CSU owns are mission critical. They're government software, there's healthcare related software, things within law and things in general, very specialty mission critical software. It's not easy to replace them. And even if you want to replace them, you have to ask that business owner, is it worth it for them to save 0.5% of their revenue by taking the initiative and vibe coding their own software and doing all these things? The most likely answer is no. And they're going to remain a customer of Constellation software. But if AI is so disruptive and it just makes things more efficient, then don't you think it's going to make Constellation more efficient and save them on their largest expense, which is staffing? So to me, the whole setup is really crazy. And I look at the stock and it keeps on going down. And I ask myself, am I missing something? Like, is there something wrong with what I'm thinking? Like, you guys could tell me in the comments. But the way I'm looking at it is sell-off looks stupid. And the market has had many stupid sell-offs before. Meta was one, Google was one. There's a lot of them that happen all the time. But I'm not seeing how AI is going to disrupt all the software companies of Constellation. And it's not going to make Constellation itself more efficient with their largest expense being staffing expense. And it's only 0.5% of those CEOs' revenues. So it doesn't make sense for them to vibe code their own software and deal with all the headache. So to me, I don't get it. Like, the sell-off is beyond what I was expecting on the company. And the multiple has contracted a lot. It was just too expensive. It has contracted. It's trading at 19 times price to free cash flow. This is very cheap for a company that's growing free cash flow 23%. Next year is expected to be a little bit slower at 10% than 20%, but it's been growing 20-25% forever, 5% through organic and 15-20% through acquisitions, and they've been doing it for a long time. So 19 times is really not expensive at all. And to me, the sell-off looks pretty stunning, and I'm still shocked by how much the stock is going down. And to me, it looks more like an opportunities and some kind of a major value trap, the way I'm seeing it, and it looks really attractive. I personally don't own Constellation software. I have a smaller software stock that's just like it. It's very similar, almost kind of the same thing, but it's a little bit smaller. I like smaller cap stocks under 10-15 billion, and Constellation is 64 billion. I like to invest in the smaller stocks as they have longer runways. But this to me is like the same investment, and to me it looks really undervalued. And you guys have asked me about it, and to me it looks really good. And that's just my opinion on Constellation software. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.